Okay, so I can see most people are in the door and with us already. Great. So hello, everyone, and welcome to this Hutchings webinar. Today, we're looking at the current pharmacy market conditions in Wales, and we'll be discussing not just ways that you might be able to increase the value of your business, which we will be discussing, but also how you can maximize the return on your sale by doing things like correctly considering tax, and I guess doing the right preparation ahead of time, setting yourself up for a smoother transaction, which is something that is easy to overlook at the beginning of the sales process, but is something you may wish you'd started when it gets to the middle of what could end up being a bogged down transaction, or could be smooth sailing if you listen to everything we have to say in today's webinar. Our expert panel tonight consists of Paul Steet, Associate Director at Hutchings Consultants.
Good evening.
Greg Williams, partner at the Cardiff-based Hugh James Solicitors.
Good evening.
And Artif Butt, Senior Accountant at Hutchings Accountants.
Hello.
Thank you, guys. There'll be a Q&A running throughout the webinar, and we'll pick up the questions and answer as many as we can at the end. So submit your question using the green button at the bottom of your video window. You can submit them at any time throughout the webinar. And like I say, whoever's most appropriate, we'll pick up your question, and we'll try and get as many answered as we can. Any that we can't answer within the time that we've got tonight, we will answer everyone's question. So even if you think it might be a lengthy question, then you can stick it in there and we can perhaps email you after the event, and we'll do that by the end of the week. We'll also be uploading this video to our YouTube channel, which also will be by the end of the week. So if there's anything that you miss, or that you want to watch again, or you want to send it to someone else who might be thinking of selling, then I'll send you that link probably on Friday after I've uploaded it and got it onto our website, and then you can watch it again at your leisure. So Paul, I think we're going to start with you today, looking at the brokers part of the transaction and looking at the pharmacy market. So if you're ready, Paul, I'm going to hand over to you.
Lovely. That's great. Thank you, Sam. Okay. So the three presentations this evening will explain the process involved in selling your pharmacy business from valuation through to completion, taking into account the marketing, accountancy, and legal aspects of the sale. We will also cover briefly some of the most common issues that arise, which you should be aware of as a prospective seller. These various issues have the potential to seriously impact the length of your sale and could affect the eventual amount of money you walk away with on completion. Our aim is to highlight these now in order that you may take steps to remedy or limit their impact ahead of any future sale. The knowledge and advice we're sharing with you is the overall thing you're seeking to minimise your stress during the sale and maximising the price you eventually walk away with. You can be assured that Hutchings Consultants, Hugh James Solicitors, and Hutchings Accountants have years of knowledge and experience in Welsh pharmacy transactions and understand how a pharmacy sale should work. For those of you who've not sold through Hutchings Consultants before, I just wanted to briefly explain that we are the largest independent pharmacy-only agent in the UK. Our typical sales will range from single pharmacies with a turnover around £300,000 up to small groups with around £100 million turnover. We are approved and recommended by the NPA to its members for the selling and buying of pharmacy businesses since 2005, and are currently the only NPA supplier to reach platinum status. We have an excellent reputation in the sector, and we're clear we never take payment from anyone who's buying a pharmacy we're instructed to sell, nor do we take referral fees from solicitors or finance brokers we make instructions to. Therefore, there is zero risk of a conflict of interest arising during your sale, which could potentially create an issue. Overall, we have a wealth of knowledge and a broad range of experience in selling pharmacy businesses. This enables us to provide you with an insight on current factors affecting the market. Before I explain the process of valuing and selling your pharmacy business, I'd like to briefly share with you what our experience of the market has been over the last 18 months and run through some key business performance indicators. Generally, many buyers in Wales have adopted a more cautious approach to their acquisitions, particularly group owners, as they have sought to understand the outcome of the changes in the contracts in 2022 and prospects for government funding. Buyer requirements have started to change, with more and more considering what service opportunities are available at the target business. Item numbers remain important though, and are still one of the key factors that attract buyers in any pharmacy sale. Keen to maximise service income potential, the availability of IP qualified staff in a target business is proving increasingly important to group buyers, multiples and existing contractors seeking to acquire. As many of you will be aware, there's been a significant increase in the number of pharmacies entering the market for sale over the last 6 to 9 months, mainly due to several corporates instigating divestment plans. In a small marketplace, this is a rapid increase over a relatively short period of time, which has impacted the market significantly. It's reassuring to see that the increase in opportunities has boosted buyer interest in the current market, with first-time buyers, existing owners and groups acquiring them. The number of affordable opportunities for buyers to acquire has quickly risen, and many of these same buyers will no doubt wish to expand in the future, thereby regenerating the sector for years to come. The corporate disposals initially diverted many buyers away from the mainstream market. However, a number of these opportunities have had their issues, which has led to many buyers deciding to look at other pharmacies elsewhere on the market. However, partly due to oversupply, the effects of inflation and some buyers lowering their bids, we have generally started to see some downward pressure on goodwill prices in recent months. As a result of the huge increase in transactions across the market, timescales for a successful sale to complete have been impacted. The component parts of the market, which are essential to most transactions, such as banks, solicitors, valuers, and NHS teams, have seen a sharp increase in their workloads. This has led to some delays as those teams have worked hard to meet the challenge. As a seller, you need to be prepared for your pharmacy sale to take longer to complete, particularly if bank lending or the NHS change of ownership process is involved. Okay, let's move on and take a look at some of the key performance indicators we've seen over the last 12 months. As a guide, pence in pound figures provide a broad overview of prices that are being paid for each pound of turnover. Please note that the following slides exclude any corporate sales data. However, future webinars will incorporate this data into presentations going forwards. In terms of average goodwill prices achieved, you will see here that average prices rose in 2022, but the important point to make here is that this figure is based on completed sales, which may have been agreed in the latter half of 2021. The figure for 2023 will include sales agreed in 2022 and perhaps better reflects the cautiousness of buyers in the market and the impact of the large number of corporate disposals, which has created a huge oversupply for a number of months. I wish to stress that these figures are average prices achieved. Potential sellers should be aware that every pharmacy sale is individual, and there are sales that will have achieved the price below the average figures quoted and others that far exceeded them. This next slide shows the average number of offers received per sale since the start of 2021. This graph is perhaps a sharp reminder of the drop-off in the level of interest from potential buyers due to a combination of the corporate disposals, contract changes, and the impact of rising costs raising concerns. We've seen a slight uplift as we've entered 2023, but it's still too early to predict how long this will continue for. This next graph shows the multiple of EBITDA, also known as the adjusted net profit, achieved on completed sales. You might imagine that as average goodwill prices have fallen, that the multiple of EBITDA would have also fallen, but a higher proportion of smaller turnover, less profitable pharmacies sold has bucked the trend and actually improved the average figure. An important key performance indicator for both sellers and buyers alike is the gross profit percentage margin the business is trading at. Average gross profit margins in Wales over recent years have performed well in comparison to England, for example, but we have started to see in 2023 the effects of rising drug costs coming through the accounts. With the pharmacy contract focusing towards the provision of services and less focused on dispensing reimbursement, as well as a rapid rise in certain drug costs, it'll be interesting to see what effect this will have on margins going forwards. Current valuations we're undertaking suggest margins are under pressure, but it's too early to understand how widespread this is just yet. Even though dispensing reimbursement has come under pressure, pharmacies with a high volume of over-the-counter transactions can be negatively viewed by the market. Most pharmacies counter trade as less than 10% of the total turnover, and those with higher percentages are usually located in city centres. Buyers aren't usually keen on paying for counter trade, which may be unsustainable. Banks also tend to look closely and tighten their lending criteria for pharmacies with higher counter trade, which can further impact a buyer's ability to borrow. Generally, these issues tend not to rise too much in many Welsh pharmacy transactions, owing to the high percentage of NHS pharmacy income as demonstrated here. This slide provides a breakdown of which categories of buyers have been most active over the last 18 months or so across Wales. As I mentioned earlier, this data excludes any current corporate sales. In 2022, first-time buyers purchased the most pharmacies through Hutchins, followed by group owners and existing owners seeking to expand. So far in 2023, first-time buyers and group owners have been the most active, sometimes working together to acquire. This arrangement can provide a mutual benefit to both parties, with the first-time buyer leaning on a more experienced business partner, and the group owners benefit from the expansion to their existing network, with the knowledge that the first-time buyer is truly invested in the future success of the business. And thus able to provide adequate and affordable pharmacist cover in an additional branch, existing owners have become more cautious still with their growth plans. To demonstrate the activity in the market, I wanted to quickly show you two examples of recent successful sales. I'm unable to divulge too much information for confidentiality reasons, but the first example is Rossett Pharmacy near Wrexham in North Wales, which had a turnover in the region of £550,000 and dispensed around 4,400 items per month. Following a period of marketing, we received offers from two parties and accepted an offer from a group buyer at a 9.76 times multiplier of EBITDA. This second example is Hugh Evans Pharmacy in Tregaron, West Wales, which had a turnover in the region of £840,000 and dispensed around 6,870 items per month. Following a period of marketing, we received offers from two parties and accepted an offer from a group buyer at a 7.2 times multiplier of EBITDA. As we look ahead to the remainder of the year, we're all aware we're living through a very turbulent time. One would suggest this isn't likely to settle anytime soon, and the challenges we see today are likely to persist for some time yet. The unsteady geopolitical situation with the war in Ukraine and the longer-lasting effects of COVID and Brexit have created or exacerbated a variety of different pressures. Inflation has pushed up business costs. Local and staff shortages have contributed to wage increases, not to mention drug price and supply issues, all of which will ultimately affect your bottom line profitability and potential goodwill value. Recent bank interest rate increases have also added further pressure on costs for both sellers and buyers alike. It's anticipated that rising costs could place some downward pressure on goodwill values in the year ahead, as increased operational costs will start to reveal themselves in trading accounts. Most pharmacy deals require bank funding, and their desire to lend is crucial in supporting the market. Banks' appetite to lend to the sector remains firm. However, there is no avoiding the effects of any interest rate rises. Any rises ultimately impact loan repayment costs, which in turn feed into buyers' calculations and decisions when submitting their offers. Banks' detailed scrutinising of buyers' loan applications is expected to continue at a time when the teams are under a heavy workload. In order to streamline their work and costs, many banks are now unwilling to provide credit approval for loans until such time the prospective buyer has had their offer accepted. This can make it a little more challenging when assessing the financial strength of a buyer at offer submission stage. In respect to supply, you may have seen the news over the last couple of days mentioning Boots' intention to close around 300 stores by the end of the year. At this stage, we're unsure as to whether or not this will lead to further disposals coming onto the market in any significant numbers. But aside from Boots, we don't anticipate a repeat of the large-scale corporate disposals seen over the last 6 to 9 months. Should this remain the case, then we expect market supply to return to some kind of normality over the coming months. Despite the many headwinds community pharmacy has faced over recent years, the sales market remains robust, but potential sellers are advised to set realistic asking prices when selling if they wish to attract early interest from buyers. Finally, you'll be no doubt aware about the trial introduction of electronic prescription service in Wales is due to start in the coming months, with a likely wider rollout to take several years to implement. The impact of this service on individual pharmacists' income is likely to take some time to be realised. So that concludes the brief overview of the current marketplace across Wales. I'll now move on to explain the steps involved in taking the pharmacy business to market, from valuation stage right through to completion, and we'll look at some key areas owners should focus upon which could influence the goodwill value of their business. But before doing so, we're just going to run a short poll, so I'm keen to understand what your opinion is as to the general direction of travel for goodwill prices in Wales. Sam, can you please run the poll now? Thank you. We'll allow a few moments for you to respond, and if there's time at the end of the webinar, as Sam mentioned, we'll feed back the results.
Yeah, that's a very efficient audience we've got there, Paul. Everyone's already got their answers in, so feel free to move on at your leisure.
That's great. Thank you very much, everyone. So before we can start the marketing, it's important to establish a value for your business and recommend a marketing price. A competent agent needs to understand your business before they can advise you, and will need to gather financial information from you to conduct the valuation. This is an example of the information we usually require. We don't wish to overburden you, but the more information we have at this stage, the more accurate we can be with the valuation. This will reduce the risk of disappointment for you when offers are called in. We review all the information supplied and produce an adjusted profit and loss. This establishes an EBITDA figure, otherwise known as an adjusted net profit. We then calculate the value by adding a multiplier to this figure, and at the same point consider any other factors that can affect the valuation. Most sellers understandably want to achieve the best price they can when it comes to a sale. Many owners ask us which areas of the business they should focus on to increase its value. For most pharmacies, there are 4 key areas to focus on, as they can impact the saleability and value of the business. Firstly, gross profit percentage margin. As previously mentioned, this is at the forefront of most buyers' minds when looking to buy a pharmacy. As mentioned earlier, the average margin currently in Wales is around 31%. A slight increase in margin can potentially add significant value to a business. Take, for example, a pharmacy with a turnover of £750,000 and a gross profit margin of 30%. An increase of just 1% in margin could potentially add around £50,000 to the value by the time a multiplier is added to the net profit, assuming costs remain the same. Many of our clients advise us they're devoting more time to buying side of the business and spending more time on researching the best prices. Working hard to improve your margin will be time wasted if you allow your business costs to run out of control. If you are planning to sell, it's so important to keep a tight rein on costs wherever you can. Both the buyer, their accountant, and lender will scrutinise your profit and loss account, and higher costs than the norm could raise some red flags. As previously mentioned, the sharp focus on costs should pay dividends when you come to sell. Item numbers. Even though the remuneration contract is encouraging the provision of all clinical services, items are still hugely important in the marketplace. The vast majority of buyers remain attracted to busy pharmacies with strong increase in item numbers. I appreciate if you are planning to sell, this may not be an area you wish to focus on, but it will increase the saleability of your business when you eventually do come to sell. Finally, it's important to leave some scope for growth in the business for a new owner. Buyers are excited when they see there are opportunities to grow a business further, and that in turn can help generate interest in your business from the market and improve its saleability. Ironically, buyers are generally less attracted to pharmacies where the current owners have maximised every possible revenue stream. However, it's important to note that in most circumstances, it can be hard to quantify exactly what the value of any potential is in the business. As a result, the market is pretty cautious when it comes to paying for potential, and lenders are unlikely to consider this to any degree, as they attach more importance to proven past performance. The way to view potential in most cases is use it to generate buyer interest and competition, which in turn should help achieve good offers from the market. So coming back to what is next in the process, we have the confidential meeting. This is an opportunity for the consultant to meet you and spend some time understanding your objectives and discussing any concerns you may have. The meeting normally takes place at the premises once the staff have left for the day. This allows us an opportunity to view the premises without unduly alerting staff. Alternatively, if this isn't possible for any reason, we can conduct a mystery shop exercise, then meet you off-site at a suitable venue. During the meeting, we discuss and agree the marketing strategy, and it's another opportunity to answer any queries you may have. The next step in the process is preparing the sales literature. Our sales brochure is designed to be eye-catching to potential buyers and covers the most salient points of the business, demonstrating profitability and potential. The objective is also to provide sufficient information to buyers at an early stage in order to reduce the volume of questions they may ask. Marketing only commences once you've reviewed and signed off the final document and are happy to move forwards. Unless otherwise specified, a confidential listing is usually added to our website, as this generates buyer inquiries, but we take care to avoid disclosing the exact location of the pharmacy for sale. We also prepare a separate financials pack, which includes copies of the accounts, FP34s, VAT returns, OTC figures, and a copy of the lease if applicable. Before moving on, I wanted to talk a little bit about the different sales strategies we use to generate buyer interest. As I mentioned, we always discuss and agree with our client the most suitable strategy to use prior to the start of the marketing. The most common strategy we use is a full marketing approach, but occasionally we will recommend to clients a more discreet off-market approach is taken. Whichever approach we take, only potential buyers who have registered with us and signed a non-disclosure agreement are contacted. With a full marketing approach, an initial shortlist of buyers is created from our database of several thousand registered buyers. When researching these buyers, the consultants will look at who is active in the marketplace viewing or making offers, as well as who we believe has the available funds to purchase. The consultants will also discuss the sale with other members of the team to seek their buyer recommendations. Potential buyers then receive the memorandum of sale, followed by the financials pack if they're interested. The buyers are followed up and viewings generated as a result. We keep the marketing under constant review, and the buyers list can be quickly expanded if necessary. The average period of marketing where viewings are taking place is usually around 6 to 8 weeks. As each pharmacy sale is different, the marketing period can sometimes be shorter or longer than this, depending on circumstances. When it comes to buyers making an offer, Hutchins uses a structured offer process that has been tried and tested over many years. Occasionally, we may recommend to a seller they consider an individual offer, but in most cases, when we feel it's appropriate to set an offer deadline and call in offers, we will discuss and agree this with our client before setting a date. We use a formal offer template letter to avoid any misunderstandings. This is particularly important with company share sales, as they're usually more complicated than asset sales. As part of the process, we request proof of funding and work to secure a deposit from the buyer if their offer is accepted. This is usually no less than £20,000. Following the initial round of offers, we provide some general feedback to buyers before calling in the best and final offers. This allows interested parties to fine-tune their bids and helps increase the competition between them. The competition generated allows us to negotiate the best price and terms possible. Once an offer is accepted, we then move into the legal stage. Now, I won't go into too much depth about this, as Greg will cover this area in more detail for you, but we arrange for the buyer's deposit to be paid across to your solicitor, who will then hold the monies in their client account. The deposit monies are held in accordance with a legally prepared deposit and exclusivity agreement, which both the buyer and seller are asked to sign. In exchange for paying the deposit, the buyer is granted a period of exclusivity whereby other potential buyers are excluded from making an offer. We then issue the heads of terms to all parties involved, including the professional advisors confirming the sale. Our role as an agent then changes from one of marketing to that of sales progression, as we consult with all parties during the sale to ensure the sale is progressing forwards. Once an offer is accepted, an average timescale to reach completion is around 6 to 9 months. However, there are many factors that can slow this down, such as bank delays, the NHS change of ownership process, and lease issues, to name but a few. As I come towards the end of my presentation, I wanted to briefly highlight 2 of the most common issues we see, either prior to or during the marketing phase of the sale. These issues can adversely affect the sale and even the final purchase price, which you as a seller obviously want to avoid if possible. The first common issue is around short leases. A lease is generally referred to as short in the pharmacy sector when it has less than 10 years remaining on the term unexpired. As most buyers require bank funding, they will be obliged to accept the lending terms offered by the lender. This can potentially become an issue for a buyer and ultimately a seller when the remaining term is less than 10 years, as the bank will usually match the term of the loan to the remaining term of the lease. It's becoming more common now for lenders to specify there must be 15 years remaining on the term of the lease at the outset of the business loan. A short lease can therefore mean the buyer has less time to repay the loan, significantly increasing the monthly loan repayments. The knock-on effect can be that the buyer has to reduce the amount of their offer, or in worst case scenario, curtail their interest due to the deal becoming unaffordable. I strongly recommend, if you're a leaseholder, that you take the time to check your lease to see if this could potentially affect you. If you believe it may do, I recommend you take advice and consult with ourselves and/or a pharmacy sale experienced solicitor, such as Hugh James, before approaching your landlord to extend or renew your current lease. I can't emphasise this point enough. It's vital you employ a solicitor with pharmacy sale knowledge to review any new or revised lease before signing. If you don't seek that advice and sign a lease which isn't fit for purpose, you possibly risk seriously affecting both the saleability and the value of your business. The second common issue we come across is FP34s in an incorrect trading name. In most cases, it tends to arise where a contractor has changed from trading as a sole trader to a limited company. It's commonly overlooked or not considered as a high priority at the time, and therefore doesn't usually present as a potential issue until much later on when a sale is considered. If selling a limited company and the FP34s are still in the sole trader's name, it's essential that they are changed over as soon as possible, as they could potentially prevent your sale completing. If selling as an asset sale, it isn't necessarily an issue, as a buyer will need to apply for a change of ownership and possibly fitness to practice as well through the NHS process. In my experience, changing the FP34s can either be an easy quick fix or it can lead to significant delays. If it can be proved that the local area team was notified of the change in trading status of the contractor, it should hopefully be just a quick clerical change. However, I have had instances where the sellers have had to apply for fitness to practice and change of ownership for the change in FP34s to be actioned. It usually takes months to complete the process and can add undue stress and delay if engaged in the sale at the time. Again, I strongly recommend that if you believe this might affect you, that you take steps as early as possible to rectify the situation and avoid the unnecessary extra stress. When considering selling, it's important to appoint an agent who can provide guidance, support, and is prepared to work hard to achieve the best outcome for you. The team at Hutchins Consultants and our sister company, Hutchins Accountants, strongly believe that we have the necessary expertise, knowledge, and skills to manage your sale and achieve the best price the market will pay for your business. At Hutchins, we have a close-knit team who have over 130 years combined knowledge and experience selling pharmacies. We take pride in the service we provide to our clients and work hard to achieve the best outcome for them. Our experience ensures we can oversee your sale right from the start through to completion. Although we regularly travel around the UK, our team is based in one central office, which allows us to quickly share intelligence on buyers and the current market. We collaborate closely with our colleagues at Hutchins Accountants. If an accountancy-related issue arises during the sale, we can quickly call upon their specialist accounting expertise for advice. So many times, their valuable assistance has helped keep the sale on track, which otherwise might have come unstuck. We have thousands of potential buyers registered from across the UK on our database. They range from eager first-time buyers through to the multiples who we have strong contacts with. This allows us to attract potential buyers for a pharmacy quickly. Finally, we have a straightforward, no sale, no fee agreement. There are no upfront marketing costs at all, and we only receive our commission once your sale is completed. We only act for our client, the seller, during the sale. We're clear we do not act for the buyer or take a fee from them. This is important, as you can be assured when selling through Hutchins, all the funds the buyer has available are going to you and none are reserved for the agent. So that concludes my presentation for this evening. If you'd like to discuss a potential sale, please do not hesitate to contact me or my colleagues. We can offer you a free verbal valuation and a free tax review. We can also arrange a confidential meeting with either myself or one of my fellow consultants at your pharmacy. So before I hand you over to Greg, we're just going to run a quick poll to understand where you might be in your potential sale journey. This information helps assist us in shaping future webinars, and your participation is much appreciated. Sam, can you please start the poll, and we'll give it a few moments. Thank you.
Okay, well, so we've got a really engaged audience here, Paul. Testament, I think, to your presentation. Thank you. We've got everyone in, so feel free to move on.
That's great. Thank you. So, yeah, thank you for listening, everybody. I hope you found the presentation helpful. I'll now hand you over to Greg Williams at Hugh James Solicitors, who will explain more about what's involved in the legal process of a pharmacy sale.
Yeah, thanks, Paul. Hi there, everyone. Pleasure to be able to speak with you this evening on what is going to be a legal overview of pharmacy transactions in Wales. Just a bit about myself. I'm a partner at Hugh James Solicitors based in Cardiff. We're one of top 100 law firms with a number of staff, our main office being in Cardiff. I head up the dedicated healthcare team at Hugh James, providing a full service offering to pharmacies. My team sort of cover all the areas you'd expect to need assistance on in your transactions. My specialty, which I've been doing over 20 years now, is sort of structuring and advising clients on their growth acquisitions and obviously their very big ticket decisions of deciding to dispose when the time is right. So just to give a quick summary of what I'm going to be presenting over the next 10 to 15 minutes. Paul's touched upon it, and I may be repeating just maybe from a legal perspective, some of the market overview that we're seeing from working on transactions. Quick overview of the legal process from start to finish and things that would follow after completion. Again, some of the key issues that we see arise that it may be good for you to have knowledge of when considering your own transactions. And then link to that some key points maybe to take away so that you can sort of consider those well in advance of undertaking your own transaction. So just on the market overview, very similar to Paul's messages. Currently, we're still seeing high levels. We're acting on matters or the pipeline of matters. Example of one of the recent works, we just dealt for the purchaser on the purchase of Hansford's Chemist in Swansea, and that came on as the sellers had operated for a number of years, right time for retirement, and our client, a local operator, extending his pharmacies in the area. So there are headwinds, as Paul has rightly mentioned, but I think in Wales, the activity levels still remain higher than we are seeing currently in some of the English sort of operations we carry out also. Similar market change in type of buyers. We are seeing a number of first-time buyers and also actually more buyers in those local operators looking to extend their current operations. And that's the majority of what we have actually been doing over the last 3 to 4 months. Structures of transactions, we are still seeing more in the way of share sales than asset sales. It's not too much in it, but it is a majority. I think obviously one of the rationale reasons for that is that most pharmacies are limited. And therefore, if a seller comes to market and it has an option to sell to a couple buyers, it can sort of predict the terms a bit and suggest that the sale has to be for a sale of shares. And we'll touch upon the pros and cons of share and asset sale in a couple of slides. Timescales, as Paul mentioned, it very much depends on your own transaction. Share sales generally are a bit shorter because there's no change of ownership requirements, but there is more of a due diligence exercise. So it can very much depend on how long it would take to get third-party consents. One good thing as we see in Wales is that the NHS teams do move quicker, and sometimes you can be surprised by the sort of fact that you'll get a response back sooner rather than you would expect in respect of the change of ownership and fitness of practice for the buyer. So touched upon earlier the share of assets, sort of which transaction to proceed with, and I know Atif will look at that particularly from a tax and accounting point of view. But just briefly, I've set out on the slides some of the sort of pros and cons for both. In particular, for the buyer, the key point is that there is no change of contract. You step into the shoes of the shareholder, and therefore the company is the contractor, and that continues. So there's little regulatory changes required. There are corporate changes required that can take up some paperwork and time, such as changing the directors of the company. And there are still third-party consents that may be required under contracts, which we'll consider a bit later. One of the definite cons for a buyer is that buying the company is a much bigger prospect than buying those assets that you would get with an asset sale. So what I mean by that is, the company has been trading for a number of years. It has the pharmacy operation with the assets in. What else does it have? And from a buyer's perspective of share sales, you need to sort of dig out to see if there's anything else that the company may have been doing, any other assets that shouldn't be linked to the pharmacy, etc. So that can take a bit more time in delving into the company's past. And obviously there are corporate authorities and corporate actions that are necessary for a company, which if they're not maintained would mean that the directors of the shareholder of that company need to consider if there's been any breaches. So other things that you just need to look into if there's a share sale. The asset sale, as I've said, the benefits for buyer is you just cherry pick those assets. Cons are the contract, the regulatory side of it needs to be dealt with. And from a sales perspective, if you do have a group and you are looking to sell one branch, then obviously having the company and selling the business one means you can continue with the other operations whilst divesting of the one asset. So just to quickly touch upon the legal process itself, as Paul mentioned, once an offer has been accepted, there will be heads of terms in place, and that sets out the key terms. It's not a legally binding document in the sense that it simply sets out what the parties have agreed between themselves in relation to key factors such as price, shares or asset sale, the property position, whether it's going to be a lease or a freehold, and proposed timescales. Paul mentioned also the fact that as part of the heads and terms with Hutchings, there are sort of deposit arrangements and exclusivity which are legally binding, and Paul set out the sort of rationale for those, so I won't go into that. The key part I did want to discuss is of the process, and I think it's the part where we get most of the sort of negative sort of feedback from sellers on transactions, is the due diligence exercise. That starts after the heads of terms have been signed, deposit paid over. It's the first step that will be carried out by a pharmacy solicitor. And this is why I think you do need to sort of really consider having a pharmacy specialist who knows what questions to ask. I think as a seller, you could be asked a number of questions that are not relevant, and that would be very disappointing and a waste of people's time. So we do come across that and try and nip that in the bud straight away. But the fact is, a pharmacy operator has a very important job through the day and little time in order to sort of get this information together. So one key tip I would say straight away, if you are considering a sale, is to make sure you can get as much information regarding the pharmacy together at your fingertips, so that it's there for when the buyer requests it. The buyer will send out a questionnaire on all the assets, and you will need to answer those assets and provide the documentation. So a good seller will help you through that, explain what it is that they're asking for, and in order to sort of provide the responses with you. But from the buyer's perspective, it's a very important part of the process, because it does sort of eke out if there's any issues with the pharmacy, anything that the buyer will need to consider in order to know whether it continues with the pharmacy purchase, or whether it thinks the price is right, or if there are some rectifications that need to be dealt with before the deal completes. So from a seller's point of view, any replies given should be as accurate and as detailed as possible. The main reason for this is that further down the line, there will be a share sale agreement, which we'll touch upon, where assurances are asked from the seller. And if you give this information to them at due diligence stage, and it's clear and accurate as to what you are disclosing, for example, if there's a regulatory issue, then a buyer will be stopped from, after the deal, turning around saying there's this issue, and there's a loss, and I need you to reimburse me. I think if you're clear on your due diligence responses and disclosures, then that would be something you would point to ensure that your liability is limited. So the sale and purchase agreement, or the SPA, it's regularly known. That is the main key document, and that's the document which the parties will spend most of the time on negotiating to ensure it's a balanced document. Buyers, solicitors trying to get the best position for their client, seller solicitors trying to ensure that only given the assurances that they're able to give, and to limit the liability to the greatest extent. It will contain things such as the key payment terms. It will contain restrictive covenants on parties to ensure that any seller couldn't, after the deal, look to get back into operating a pharmacy business, applying for a contract within a period of time following completion and within a limited geographical area. The SPA itself will also contain a number of pages of assurances that the seller will be giving to the buyer in respect of the business that it is selling. Things in relation to employees, property, in relation to the regulatory position. So that's a very important part of the process. And again, the wording of the document needs to be negotiated to ensure that from a seller's perspective, you were only given those assurances you can give, and from a buyer's perspective, that you are asking the right questions, having looked at the due diligence and got the right cover. Very important, obviously, for the buyer. On a share sale, there will be some added provisions to the document to deal with net asset calculation that would be needed. Again, Tief will sort of consider that and touch upon that in his speech. There will also be a number of tax provisions that your solicitors and tax advisors would need to work on with you to ensure that the end result is any tax rising for the period prior to completion remains with the seller, even if it arises after completion. So the disclosure letter is by far the biggest document that the seller can look to limit its liability to a buyer under a transaction. The disclosure letter is basically the response to those warranty assurances that the buyer asks in the SPA. So if the buyer asks, are there any regulatory issues? In the disclosure letter, if you didn't set out the fact that there are any sort of issues, there is potential liability for the seller following the deal. If you do in the disclosure letter, however, set out that there is an issue with sufficient detail for the buyer to be aware of that issue, then that stops a buyer from, after the deal, trying to return to the seller and saying there's a liability to pay. Obviously, if it's a big issue, that could affect the deal, but the principle of a disclosure letter is to limit liability. Around that, there's a number of property documents that, depending on whether it's a freehold or leasehold interest, will be required. Of course, mentioned that there are obviously number of terms the funders will be looking at in respect of the property documentation, and therefore expectations on leases and terms in the lease that the funders will require. If they are not there, then that can slow up the process, because it will take some time to get the landlord's solicitors to deal with the landlord and to get those changes made. And finally, around the sale documentation requirement, there will be a number of other documents that are required. If it's a company sale, there'll be a number of authorizations, board minutes of directors, resignation letters, stock transfer forms to transfer the actual shares. The list goes on. But again, you know, a experienced advisor will be able to take you through those and ensure that the right documents are put into place and the right corporate changes are made when necessary. Employees, just quickly to touch upon employees, if it is an asset sale, then there are added requirements for both the seller and the buyer. The transfer of undertakings is a legal set of regulations that apply, and basically any employees will need to be informed of the transfer. If there's any changes of whatever size, they would need to be consulted with reasonably prior to completion. There are some stringent laws on this, and if they are not met, then it does come with some penalties that apply. So again, a very important aspect of legal work is ensuring that the notifications are being carried out correctly on whichever party's side we act for. Then on completion, just to make the point that solicitors control the completion. If there's funding, the buyer's solicitors will send the money to the buyer on an undertaking. An undertaking is just a promise to hold it until they say to release it. Once the buyer solicitor has the money, they're then in a position to confirm that completion can occur. And following the deal, the buyer solicitors will transfer that money to the seller solicitors. Completion itself will happen remotely. Days of meeting in offices are long gone, I would suggest. Obviously, still there for all parties will require it and would like that. But if anything, you know, since COVID, it's gone more electronic, and DocuSign is used, you know, throughout the legal profession. So the documents would be sent to you to sign, return, and then the solicitors would control the completion process. Physical handover would happen at the premises, with a stock take being taken in both the asset and a share deal. And the terms of the stock take and how that is valued, again, will be covered in the SPA. And if you are staying on in any capacity as a locum or a consultant, then again, that would be documented as part of the transaction. Post-completion, there will be some things to consider. Completion accounts on share sales only. That's something that ARTIF will no doubt pick up on. And between solicitors and accountants, it just needs to be clear as to how those completion accounts are prepared and what happens if there's any disagreement on those completion accounts. The SPA will contain terms to provide that an expert will be appointed to determine the position. So the key problems we see on given transactions: buyer protections. You know, there needs to be a balance of protections for the buyer and what the seller is able to give. That's where a number of weeks of negotiation can occur, and a market position on what is expected should be the end result. You know, a buyer shouldn't get away with too many protections, and the seller shouldn't give up too many of its limiting its liabilities. Just a few points there to set out, you know, what is sort of a market position on the limitation of a liability for a seller. So for non-tax claims, it's usually in the SPA that a party would have 12 to 24 months in which to sort of look to the sellers to get any reimbursement for claims. Tax is longer, and usually 6 or 7 years, because of the period of time in which HMRC can come back to the buyer. Also, there should be some limit to stop any frivolous claims arising. So the seller shouldn't be bothered with, you know, if there are very minimal claims, the cost of getting everybody else involved might outweigh the actual claim itself. So there are usually limitations agreed between the parties, and so that's somewhere between a basket of 1 to 3% of the consideration. If it's under that, then the seller is usually not liable. If it's over that, then the seller is liable for not only the excess, but also the amount up to that balance. Property we touched upon. In addition to ensuring the lease terms are correct, one of the key things that should be in place: asbestos reports, fire reports, EPC certificates if there's also other lettings in the property. Number of times that they are not present and can slow up the transaction, so get those in order. Clawbacks, sometimes, general FP34 sort of provisions, if they are incorrect, that should be covered, but it's the general CAT-M sort of type clawbacks and what happen if those were applied. Who pays for them? Would the seller be expected to pay money over to the buyer, or is it a position that there is no change at all if there is a clawback, because sometimes that clawback could be positive. So it's just something that needs consideration on a given case and at the time of the transaction, really. In respect of any contracts that are in place, it's important to check if there's any change of control provisions. If there are, that would give the third party the opportunity to terminate the contract. So again, I think everybody just needs to be aware of what the position is. We've seen it arise where if a third party knows they can get more for the asset and there's ability to change control, they may terminate and look elsewhere to get a better cost for that asset, given that the contract might have been set a few years earlier. GDPR is raising its head in every sector, but because of the sensitive personal data pharmacists have, it's becoming a key issue that parties are compliant, they are registered, they have policies. So buyers will be expecting this to be in place. If they're not, then would be expected to either do so or to give assurances if there's any sort of loss that arises from it. And on the employee front, the IR35, whether somebody is a consultant or employee, still remains. If it's quite clear that the consultants are acting as employees, then there will be an issue that the buyer will, at very least, will be wanting some protection from, whether that be a retention or whether that would be a full indemnity going forward. So finally, just points to take away. As I said, any advisors you apply, I would get those appointed early. It's best that any issues is considered way before the deal actually concludes. Any skeletons you're aware of, then deal with them. And that could be as simple as, if you haven't got the necessary data protection registration, you get those things already and you have the information to hand, because the process can be prolonged. And it's one last final point. We do see pharmacies on share deals, quite a lot of cash sitting in the pharmacies or investments. And I think it's just some forward planning as to what to do with that cash. It sometimes can be treated as part of the consideration, but otherwise it needs to be extracted in the best tax efficient form possible. So that's it from me. If there are any questions, and I think, as Sam said, we can answer those later on or at any other time if you'd like to get in touch.
That's great. Thanks ever so much, Greg. That's right. What Greg says, that we will answer all questions that come in at the end of this webinar, or if there's something that you want to follow up with in more detail directly, then I'll provide the panelists' contact details for you in a follow-up email straight after this webinar, actually. Thank you, Greg. And Atif, just before we move into your presentation, I just want to get a feel for our audience's opinion of the electronic prescription service. Just kind of as we've been going through this, I just think it'd be interesting to see if there is a general feeling about it. So I'm just going to do a quick kind of finger in the air poll. And we've been very quick at this so far, so I'm sure everyone in our audience will be able to just knock this out very quickly. So I will launch this now. I just want to kind of understand whether you feel like it's basically just a finger in the air. Is it going to be something that's positive or negative, or something that only time will tell? Okay, so I think we're good. Thank you to everyone who answered. Artif, I'm going to end this poll. There we are. And then, hand over to you.
That is great. Hi, everyone. My name's Artif Butt, and I'm the Senior Accountant at Hutchings Accountants, where we've been specialising in pharmacy sales across the UK for over 30 years. Today, we're talking about how you could increase the sale value of your pharmacy in Wales. We'll look at the main steps of a pharmacy sale, some of the issues we see coming up along the way, and how you can best be prepared for them. We've heard some excellent points from Paul and Greg on coming to market and the legal aspects of sale. And now I'm going to be focusing on accounting and tax matters, so you can get a comprehensive idea of what you need to be thinking about and when. We'll be covering preparing for sale, pre-sale issues, due diligence, the legal process, completion and the completion accounts, and what happens after completion. Let's start by talking about the first step, preparing for sale and understanding your tax position. If you're thinking of selling your business in the future, it's never too early to start getting ready, even if you don't plan to sell for many years. Being properly prepared makes a huge difference, not only in the price you'll get, but also in how much you'll be left with to enjoy in your retirement after paying the tax man. This has never been as important as it is today, with a number of risks and uncertainties faced by the pharmacy sector and beyond. Recent events such as the COVID pandemic, Brexit, and the war in Ukraine have changed our lives in a way that would have been unimaginable a few years ago and contributed to rising costs in a number of areas. With inflation and interest rates still increasing and no end in sight to the cost of living crisis so many households are facing, the economy is facing an unprecedented challenge, and we're likely to see changes in tax rates and reliefs coming in the near future. The recent budget confirmed changes to capital gains tax annual exemption, which has been reduced from £12,300 to £6,000 from April 2023 and will reduce further to £3,000 in April 2024. Capital gains tax is an obvious target for change as it's currently charged at lower rates than income tax. The government also made significant changes to entrepreneurs' relief a few years ago, which I'll talk about later, and it's possible we might see further changes to come, or even the relief being abolished completely. Paul's talked about the current state of the market and how it's been affected by current events. But as we've seen, there are a number of factors that can change things significantly over the coming years. Now, of course, it's impossible for us to accurately predict what's going to happen now and in the future, but the best way to manage these risks is to be prepared. Once you've decided you want to sell your pharmacy, be sure to get specialist advice that takes your individual circumstances into account. This will help you work out the best strategy for the eventual sale, having considered the accounting, legal, and marketing perspectives. At Hutchings Accountants, we start by reviewing your accounts and tax position to recommend the most tax-efficient way to structure your sale and extract the profits. Getting this right can have huge implications that could make a difference of hundreds of thousands of pounds to your tax bill. It's really important to look at this as early as possible, as getting the best tax treatment sometimes involves making changes to the business years in advance of an eventual sale. If your pharmacy is trading through a limited company, the sale can be structured as a share sale or an asset sale, as Greg explained earlier. To decide on the right structure for a company sale from a tax point of view, we calculate what your estimated tax bill would be from each option, as there's a considerable difference in the tax treatment depending on which way you go. A share sale means you'll be taxed personally on the gain and pay capital gains tax. An asset sale would mean the company selling the business and paying corporation tax, and you being subject to further personal tax charge when you take out the profits. If you are considering a company share sale or personal asset sale, you may qualify for Business Asset Disposal Relief, or BADR, formerly known as Entrepreneurs Relief. BADR is a relief that can apply when someone sells part or all of their business and means you only need to pay tax at a rate of 10% on the gain as long as certain conditions are met. Each individual has a lifetime limit of £1 million worth of gains that can qualify, reduced from the previous limit of £10 million. In a share sale, the qualifying conditions are that you need to hold at least 5% of the shares of the company and voting rights, be either an employee or officer of the company, and the company also needs to be considered a trading company. These conditions have to be met for at least 24 months before disposal. So, without BADR, if you were to sell your business for £1 million, you'd be liable to capital gains tax at 20%, which is £200,000. But if you qualified for BADR, this would be reduced to 10%, meaning you'd only need to pay £100,000, which is a huge saving. However, there are circumstances where you may not qualify for the relief, which we'll talk about shortly. If you are considering selling your pharmacy in the next few years, it's worth thinking about how you can increase the business's value before you sell. We recommend getting a professional valuation by pharmacy specialists and working with your accountant so you can identify the key performance indicators affecting the value and look at how these can be improved over time. Your accountant can also review your tax position to see if there are any other issues that might increase your bill and work out the steps necessary to resolve them to ensure you get the most favourable tax treatment when the time comes. Looking at this ahead of time gives you the opportunity to plan and map out a list of prioritised targets you want the business to achieve and a timeline over which you want to achieve them. This can be things like reducing stock holding and wastage, improving the business's gross profit margin, reducing staff costs, or making sure the sale will qualify for BADR. The aim of this process is to increase the value of the pharmacy as much as possible before it's put on the market. It's important to remember that every £100 spent on getting the right professional advice and input can increase the profitability of your business by thousands of pounds, which in turn can increase the value of the pharmacy by tens of thousands when it's time to sell. Now, as we've said, preparation is key, and it's worth looking at a bit more detail at some of the things that we commonly see in pharmacy share sales that can cause problems or present opportunities. I talked earlier about the conditions for BADR. If you have a company with more than one share class, this may need to be looked at, as some of the shares may not qualify for the relief at present. Your company also might not qualify if it owns too many investments or holds too much cash, as there is a risk that HMRC would no longer consider it to be just a trading company. As we said before, each individual has a lifetime limit of £1 million of gains that can qualify for the relief. So if you've ever sold or incorporated a business before, you may have benefited from the relief and used up some or all of your allowance. Also, if your sale proceeds are over £1 million, they won't all be covered by the relief, and some will be taxed at the higher rate of 20%. However, all of the above can be dealt with if you have enough time. When it comes to BADR, it's important to identify any problems as early as possible so you can take the necessary steps to remedy them. As well as affecting BADR, the level of cash in a company can have other implications to your sale which may need to be carefully considered, as Greg touched on before. It's not unusual in pharmacy sales for us to see high levels of cash being retained by the company at the point of sale. For a seller, this can be desirable because it lowers their overall tax bill, but a buyer may not want to take over the company with such a large bank balance, as they'll effectively need to pay for the cash with more cash. In such cases, it's usually possible to arrange for a cash extraction at completion, where the seller can effectively take out the excess cash, leaving the buyer with enough for their working capital needs. Investment property owned by a company can cause problems with BADR, but we more commonly see pharmacy companies that own the trading premises they operate from. Sometimes these are included in the business sale, but there are cases where the business owners want to take them out of the company before sale so they can give the new owners a lease and benefit from the rental income. It's very important to take advice on the most tax efficient way to do this. Another important area that's worth considering early on is what you want to take from the business in the form of salary, pension, and dividends in the years leading up to your sale. Tax rates on salaries and dividends are generally much higher than the 10% rate you can achieve on a sale with BADR. So it makes sense to take less salary and dividends from the business if these are going to be taxed at a higher rate. This will mean the company's cash balance will be higher at the point of sale, and care needs to be taken that it's not so much that HMRC no longer consider the company a trading company and BADR is lost. However, it's also important to remember that some dividend income is taxed at 8.75%, which can represent a tax saving over the rate you can get on the sale. So it's well worth engaging in some tax planning in your final years of ownership to make sure you optimize your takings so that you're paying the lowest rate of tax overall on your lifetime earnings. These are some of the things to consider before a sale, but now let's talk about what happens once you've found a buyer. Greg set out the main aspects of the legal process earlier. And once your potential buyer pays their deposit, the next steps would be the due diligence process and finalizing the sale agreement. As accountants, our job is to work alongside your legal team to make this all run as smoothly as possible. The due diligence process gets underway and the buyer's accountants request a list of information. In a share sale, the buyers will want to go back over several years so they can be as comfortable as possible about the history of the company. Your lawyers will go through the sale agreement with the buyer's lawyers to try and agree a finalized version. Your accountants would also review this from a tax and accounting perspective, suggest any changes to the main terms and covenants, and carefully go through the warranties to make sure the buyers are made aware of any exceptional events or circumstances. You can see how important it is to engage accountants and solicitors who specialize in pharmacy sales to get this bit right. Because pharmacy is all we deal with and we see so many sale agreements in the course of our work, we know what's appropriate and what is excessive to warrant. And so with our combined experience, we're able to limit your risk. In a share sale, the total amount you receive for selling your shares is made up of the agreed price for the goodwill and fixed assets of the business and a further adjustment for the net asset position of the business at the point of sale. The net asset position is made up of the company's current assets, which are things it owns or is owed, like cash, stock, and NHS and VAT debtors, minus the liabilities, things it owes out, like money owed to suppliers or HMRC. If there are more assets than liabilities, an additional payment is made for the net asset value. But if the liabilities are more than the assets, a deduction is made from the goodwill payment. When the buyers are happy with the results of the due diligence exercise and the sale agreement is close to being agreed by both parties, a target completion date is agreed for ownership of the pharmacy to transfer from you to the buyer. It's generally helpful if the completion date can be at a month end, as this makes it much easier to calculate the position at the point where the business is to be transferred. Once a target date for completion has been agreed, we need to provide the buyer side with an estimate for the company's net asset position at that date. Of course, we're unable to provide exact figures at this point, so we estimate this as best we can. This then gives the buyer an idea of the net current asset payment they will need to make in addition to payments for the goodwill and fixed assets. Once completion accounts have been prepared and agreed by both parties several months down the line, a final payment can be made for the actual amount due as per the accounts. If this net asset payment is predicted to be quite large, it's quite common for an advance to be agreed to be paid at the point of completion. Now, coming back to sale agreements, when we review sale agreements, there are a number of things we look at carefully. For example, the proposed method to calculate the net current asset figure, as this will affect your final payment. We also look at how the agreement sets out the terms by which the business must produce the completion accounts and what the procedure would be if the accounts were not agreed by the buyer. We'll also go through the tax warranties in the agreement very carefully and cross-check them with the company's accounts and history for the last several years to produce a list of any facts and circumstances that need to be disclosed to the buyer, and these are then collated by your solicitors in a disclosure letter. The tax warranties are very detailed and refer to numerous statutes from tax and company law, so it's essential they're looked at by an experienced accountant familiar with your business and pharmacy sales. Putting the time in to get this exercise right means you can sign the sale agreement with peace of mind and confidence that your interests have been protected. After completion, the next thing we need to consider are the completion accounts. These need to be prepared with extra care and attention to detail to make sure they're in line with the sale agreement and also represent the closing position as accurately as possible, so you can benefit from all the profits from your period of ownership without paying for any of the business expenses from after this date. Once the accounts have been prepared on this basis, they're sent to the buyer's accountants, and under the terms of the sale agreement, they have a specified period in which to inform us of any disputes or to accept the accounts. After reviewing the accounts, the buyer's accountants will either accept them or send a list of any disputes or queries they believe should be included or removed from the accounts. For example, payments made by the company after completion that they believe were incurred before completion. We would go through any points of dispute and try to agree them with the buyers and revise the accounts accordingly so they're acceptable to both parties. The buyer will then release the final balancing payment for the net current assets, which means you've now received full payment for your business. The final step is declaring the sale on your personal tax return and calculating and paying the tax due. The sale will fall in a tax year ended 5th of April and would need to be reported in your tax return for that year. This would need to be submitted and the tax paid by the 31st of January the following year. So as an example, if you sold your business on the 1st of January 2023, this would fall in the 2022-23 tax year, and your tax return and payment would be due to HMRC by the 31st of January 2024. If you received a total of £1 million for your business and its assets and paid professional fees of £50,000, your total gains from the sale would be £950,000, and the capital gains tax due on this after the application of your annual allowance and business asset disposal relief would be just under £94,000. Once we calculate your tax bill, we can also advise you on ways you could reduce it. If you haven't already, you should also take advice on estate planning and your will. It's worth considering your exposure to inheritance tax or IHT at this point. When you own a business, you benefit from business relief, which means if you were to pass away unexpectedly, the business assets would be outside the scope of IHT. But once the business is sold, business relief no longer applies, and your share of the cash proceeds would be liable to HRT if you were to die suddenly. We also advise all our clients to talk to an independent financial advisor who can guide you on investments you can make for a tax-efficient income in retirement, so that all you're left to worry about is what to spend the rest of your money on. That's it for me. Thanks everybody for listening.
That's great. Thank you so much, Atif. It's incredible to hear how two, I don't know, effectively identical companies structured differently could net such a huge difference from the sale of their property, tens or maybe even hundreds of thousands, just from the right structure. So, thank you for outlining that for us, and thank you to all of our panelists. So we haven't had a huge amount of questions in. I do have a couple that I want to go through quickly, or well, not even that quickly. We've got time. I think probably the lack of questions speaks to the comprehensive nature of your presentations here tonight, gentlemen. So good work and thank you for that. So where are we? First one I just wanted to pick up is about the electronic prescription service. So do you think the introduction of electronic prescription service will affect goodwill values and specifically of health center based pharmacies? Has anyone got any kind of thoughts on that?
Yeah, I can come back on that one, Sam. Very good question, I think. I think in terms of what we've seen in England, where EPS, I believe, was launched about 2019, I think it was. I think there's been some winners and some losers, I think, really. I think from a patient perspective, it's made it sort of much easier to order sort of repeat prescriptions, for example, particularly using the NHS app. It's also made it very easy to quickly move your nomination around from which pharmacy you want the script to go to electronically. So I think pharmacists are very good at interacting with their patients and their customers. I think it becomes sort of even more key when there is that sort of it's so easy to sort of move around between sort of pharmacies. I think really. I think in terms of health centre based pharmacies, what we've seen in England in some cases is that I think in terms of sort of goodwill values for those health centres, they still sell, they still attract a lot of interest. But I think we have, as I say, we've certainly had experiences where, from a buyer's perspective, they've sort of looked at some of the, in some cases, sort of very high sort of rental costs for being, having that proximity to the surgery, and they've sort of looked at sort of capture rates for the items from those surgeries and sort of tried to sort of marry up the two, and quite often they've sort of realised, well, actually, if they got the ability to do so, they could potentially move out of the health centre into a high street premises. And still, attract those items. So yeah, in some circumstances, it has had a bit of an effect, I think, on goodwill prices to some degree. As I say, I think there's sort of winners and losers. I think the perhaps those pharmacies that are sort of based within sort of villages or sort of smaller settings, perhaps unopposed, they sort of stand in good stead. I think it's perhaps the pharmacies that are probably in sort of larger, city centres, for example, where they may not necessarily, because of the volume of trade, they may not necessarily have that sort of such a personal interaction with patients in some circumstances. So that can make it more difficult to retain those sort of patients, I guess, really. So obviously more emphasis needs to be sort of allocated to sort of keeping that patient ongoing, because it is so easy for them to move around, really.
Oh yeah. Yeah, and I guess it's a hypothetical at the moment, and we'll have to see kind of what effect, if any, it does as things roll out. But
I think from as I say, from a patient perspective, I'd say it's so easy. So using the NHS app, which I do, and so you don't have to go and visit surgery. You can order a repeat prescription. Nominate where you want it to go to, and that's very easy to sort of change if you're in you so wish. If you want to change pharmacy, it gets sent to. But so as I say, yeah, I think there's been sort of some winners and losers over the years, but certainly it's a good sort of patient experience.
Yeah. Okay. Thank you, Paul. Greg, this one might be for you, although I know that property isn't where you specialize, but the question that's come in, my lease only has a few years left on it, but I can't seem to come to an agreement with my landlord to extend. A difficult situation. Do you have any advice, and will this stop me from selling?
Yeah, as you say, I'm not a property expert, but it is something I've come across. You'd like to think, first and foremost, that any landlord wouldn't want to take that approach, given that the whole purpose of having the leasehold premises is to let it, and to pharmacies with the sort of surety that they give, the NHS contract. You'd like to think this wouldn't arise that often, but I guess it would depend on its terms, Sam. In particular, if the lease terms provide that it's subject to legislation, Landlord and Tenant Act, then there are rights for tenants to look to extend the terms of the lease for another duration, and that would apply notwithstanding sort of parties' sort of commercial sort of intention to agree on it. So I think it very much would depend on the circumstances. I think any lease that is currently come to an end period would need to be reviewed to check the position, and then appropriate advice to provide. So as to whether it would stop a transaction, you'd like to think not. And even if a landlord is being stubborn, we find that usually is a way around it.
Okay, well, great. Thanks, Greg. If you still like, the person asked that, if you still like more information about it, then you can contact Greg, who'll be able to put you in touch, I imagine, with a property expert, Hugh James. The first thing there to consider or to find out is whether your lease is covered under the Landlord Tenant Act, which not all leases are, I don't think. But if it is, then you have quite a sure footing there. So, okay, we can follow up with that afterwards if you'd like more details on that. Just quickly, we had another question come in just now that I want to get to. Artif, we got cut off earlier, but I don't know if you had something that you wanted to cover today.
Yeah, we have had a question come in from someone saying, I've got a limited company with 2 pharmacy branches in it. And I want to do a share sale, but I want to keep one of the branches. Is that possible?
Okay, sure.
And so I think the first thing to say there would be that while the conventional wisdom is that a share sale is going to be the most tax efficient thing for a seller, it is worth looking at the individual circumstances of the case first to look at, well, what the tax would be on an asset sale. Because sometimes the situation can be a bit different. So there can be ways that you can still do an asset sale. So, for example, if you've got 2 offers in for your pharmacy, one as an asset sale, one as a share sale, and the asset sale is a higher one, it's worth looking at what the tax bill is going to be each way before you decide which way to go. Mm-hmm. Second point on this is that, if you have got two pharmacies in a company, and you wanted to keep one, it is possible for you to extract that, move it into another company, and then do a share sale of your existing company with the pharmacy that you want to sell. So that is something that can be done. It just needs the right planning and execution. There obviously, as always, the right professional advice is going to be key there.
Okay, great. Thanks, Artif. And then one final question that I say has just come in. It's a two-parter, and it's cross borders. So, are buyers of Welsh pharmacies more likely to be based in Wales or England? Second part, are English chains still buying pharmacies in Wales? So the first part there, are buyers of Welsh pharmacies more likely to be based in Wales or England?
Yeah, I think, generally speaking, most of our pharmacy sales in Wales are purchased by buyers sort of already based within Wales. But saying that, certainly, pharmacies perhaps are sort of based sort of close to the English border. I've certainly been involved in sales, say in the last year, where they've been English-based contractors that have bought them. Interestingly, certainly I've found some of those pharmacy sales that are based perhaps more in sort of coastal regions have attracted buyers from all sort of parts of the UK outside of Wales, perhaps looking for a change of lifestyle. You know, as we know, sort of, you know, the coastline around Wales is beautiful, and you know, sort of, you know, buyers looking for that sort of change. So I've sort of seen, I'd say, buyers from, you know, all around the UK sort of move, you know, potentially looking to move there. So, but yeah, I would sort of say most of the buyers that we transact with within Wales are sort of based there. But in terms of our sort of marketing, you know, we don't sort of just restrict our marketing. When we're marketing a sale in Wales to those buyers based in Wales, we'll look elsewhere to attract buyers if need be. Are English chains still buying pharmacies in Wales? I think certainly there is an interest there. I think I mentioned in terms of some of the groups, they're I think they're sort of keen to understand the sort of contract changes and what the implications are for their income. But yes, generally speaking, yes, but as I say, it has sort of cooled down a little bit in that respect. Just as I think many buyers just want to sort of see how income will be affected, and for in most cases, the best way to see that is how the accounts present. So as I say, as we go through this year, we'll see sort of the effects of a lot of those changes sort of really sort of coming through within the accounts, and there'll be better place to make a judgment on for each opportunity that sort of comes up. You know.
Okay, brilliant. That's all the questions that I've seen come in. If no one else has anything, let's come directly to them. No? Okay, well, with 1 minute to spare, that brings us right on time. So thank you to everyone who's attended, and we have quite remarkably, 100% attendance still. So people were quick to get on and have stayed with us right to the end. So thank you for that. Thank you to Paul Steet of Hutchings Consultants, Greg Williams of Hugh James Solicitors, and Artif Butt of Hutchings Accountants. As I said, I will email you a link to the recording of the webinar as soon as I've got it live on our website. Then that should be by Friday. I think that's all from us. So thank you very much. Good night.
Good night, everyone.
Right.